Imagine a single decision that could redraw the economic map of an entire region. Ethiopia, one of Africa's fastest-growing economies, faces a pivotal choice. What if it shifted just 20% of its trade away from Djibouti? This move would be a geopolitical earthquake, shaking the Horn of Africa and reverberating through global shipping routes. For Djibouti, it would mean a catastrophic loss of revenue. For Kenya, a validation of its massive investment in Lamu Port. For Ethiopia, it's a step toward strategic independence, diversifying away from a single point of failure. The stakes are high. This is about more than containers and cranes. It's about power and the future stability of a vital region. The world is watching, as Ethiopia's decision will signal a major shift in regional power dynamics. The movement of ships and trucks could dictate political and military power for generations. As of early 2026, infrastructure is rising, alliances are shifting, and economic pressures are mounting. The Djibouti versus Lamu story is a classic tale, an established incumbent facing a hungry challenger, with Ethiopia caught in the middle. Ethiopia's decision will be shaped by global trends, security concerns, and hard economic logic. This is the drama that will define the Horn of Africa for the next decade. To grasp the magnitude of this shift, consider Ethiopia's near-total reliance on Djibouti. After losing its coastline post-war, Ethiopia turned to Djibouti as its only reliable gateway. Today, 95% of Ethiopia's imports and exports flow through Djibouti. Every car, bag of fertilizer, and machine for Ethiopia's 120 million people arrives via this single corridor. The Addis Ababa-Djibouti corridor, with its modern electric railway, is Ethiopia's economic lifeline. But this efficiency comes with risk. Over 90% of trade depends on one partner and one route. For Djibouti, Ethiopian cargo is the backbone of its economy, accounting for a huge share of GDP. This gives Djibouti leverage but also makes it vulnerable to Ethiopia's decisions. The relationship is strong, but the risks for both sides are undeniable. For Ethiopia, it's the risk of being cut off. For Djibouti, the risk of being replaced. The balance is delicate and increasingly unstable. Djibouti's dominance as a port is no accident. It's the result of decades of strategic investment and leveraging its location at the Bab el-Mandeb Strait. The Dorala multipurpose port and container terminal are among Africa's most modern, built to serve Ethiopia's needs. The Addis Ababa-Djibouti Railway, financed by China, created a seamless, efficient trade corridor. Djibouti also became a global military hub, hosting bases for the US, China, France, and others, offering unmatched security. This security made Djibouti the safest, most attractive option for Ethiopian trade. But Djibouti's economy is built almost entirely around Ethiopia, a single pillar with growing cracks. Its prosperity is tied to Addis Ababa's decisions. The first signs of vulnerability are now appearing. Djibouti's fortress is only as strong as Ethiopia's loyalty. Enter Lamu Port and the Lapset Corridor, one of Africa's most ambitious infrastructure projects. The vision connects Kenya's coast to Ethiopia and South Sudan, creating a new economic artery. Lamu Port is operational, designed for the largest cargo ships, and strategically positioned for Ethiopia's southern regions. Billions have been invested, but the corridor's full potential depends on completing highways and a crucial railway to Moyale. Progress is mixed, roads are improving, but the railway is years away. Lamu offers Ethiopia a glimpse of trade diversification and bargaining power. For now, it's a dream in progress, promising, but incomplete. Kenya is betting big that Ethiopia will come. The stakes couldn't be higher for both countries. Ethiopia faces a classic dilemma: stick with Djibouti's proven monopoly or gamble on Lamu's unfinished promise. Djibouti offers reliability but creates a single point of failure. Any disruption could cripple Ethiopia's economy. Djibouti's leverage is immense, but so is its vulnerability to losing Ethiopian business. Lamu's risk is its incomplete infrastructure and security concerns along the corridor. Shifting trade now means slower, costlier road transport and navigating unstable regions. For Ethiopia, it's a choice between present certainty and future resilience. Djibouti's weakness is overdependence. Lamu's is being unfinished. Ethiopia must weigh immediate risks against long-term strategic gains. The decision will reveal its appetite for risk and vision for the future. It's a choice between the dangers of today and the uncertainties of tomorrow. The outcome will reshape the region's balance of power. Shifting trade to Lamu isn't just about signing a new deal. It demands massive infrastructure, security, and political alignment. Kenya's highways are improving, but Ethiopia's connecting roads and logistics hubs need major upgrades. Security is critical. The corridor passes through volatile regions, requiring joint patrols and intelligence sharing. No company will risk cargo on an unsafe route. Political commitment is essential. Tariffs, customs, and regulations must be harmonized. The real cost is not just roads, but the political and diplomatic capital to forge a new partnership. Without trust and investment, Lamu remains an underused port. The foundation must be built on more than concrete. It needs shared vision and resilience. The Djibouti-Lamu debate is shaped by global trends. Recent crises have exposed the dangers of relying on single trade routes. The Red Sea's volatility, from Houthi attacks to piracy, has made the Bab el-Mandeb Strait a high-risk zone. For Ethiopia, these threats highlight the urgency of diversifying supply chains. The world is moving from just-in-time to just-in-case logistics. Nations want options and redundancy. Lamu offers Ethiopia a route that bypasses the Red Sea, providing access to the Indian Ocean and greater security. Developing Lamu is no longer just an opportunity, it's becoming a strategic necessity. The risks in Ethiopia's primary corridor make Lamu's high cost and long timeline seem worthwhile. Building resilience is now a national imperative. The global context is pushing Ethiopia to act. The future depends on adaptability and strategic foresight. Ethiopia stands at a crossroads: stick with Djibouti's monopoly, or risk a new future with Lamu. Even a 20% shift in trade would trigger seismic changes across the Horn of Africa. Kenya would gain, Djibouti would lose, and Ethiopia would secure strategic flexibility. If Ethiopia hesitates, Djibouti's dominance continues and Kenya's investment risks becoming a white elephant. The dual-port strategy, using both Djibouti and Lamu, offers competition, security, and leverage. The time for decision is now. Investments are made, pressures are mounting. Ethiopia's choice will echo across the continent for decades. The region's future hangs in the balance. The world is watching as Ethiopia prepares to redraw the map. The next move will define the Horn of Africa's destiny.